Hi Scott, nice to hear from you again. We did see each other in San Diego in November, so it's a bit weird now that we are absolutely thousands of miles away, but we'll see each other again soon. But yeah, ready to go. Okay, so welcome. I'm Paul Bratby from TradeTheFifth.com, and I wanted to share and teach you the core trading strategy that I've been using for over a decade, and it's been mainly stocks. Okay, I started off part time when I was in the military. I was an engineering manager in the British Army for a long time, and I started trading part time, and I needed something that I could do just once a day, spend an hour when the markets were closed, and to work off a daily time frame. So I just started down the swing trading route, if you like, and started to develop this strategy and learn more. And then, I got lucky, if you like, in that I started trading friends' monies and friends of friends' money, and all of a sudden I find myself as a money manager. And I was trading money full time for people. Since then, I've retired, and I've started TradeTheFifth.com. MyTradingBuddy.com belongs to me as well. That's a resource portal. But today, I want to look at this simple and repeatable, a more important, strategy. If a trader sticks to this type of simple and repeatable strategy, with strong discipline, it can yield consistent profits. And I treat my trading like a business. I look at monthly and quarterly profit and loss. So this sort of strategy lends itself to that because there's no stress involved with swing trading as far as I'm concerned anyway. Okay, so everything I talk about in this webinar refers to the daily time frame on stocks or ETFs. I found that this is the truest time frame when swing trading a trend, as each bar is a measurement of the whole trading session. So it has an open, a high, a low, and a close. Then when you put all of these daily bars together, you have a real picture of how this stock is performing, where it is in a trend, or even if it's not in a trend. So that's, for me, that's the truest time frame, if you like. So let's get going. Risk disclaimer, as you've probably seen thousands of times, swing trading, day trading, short-term trading, options trading, and futures trading are extremely risky undertakings. They are generally not appropriate for someone with limited capital, little or no trading experience, and or low tolerance to risk. Never execute a trade unless you can afford to and are prepared to lose your entire investment. All trading operations involve serious risks, and you can lose your entire investment. No trades are recommendations or advice, and we cannot be sued for losses of capital. All trades are for educational purposes only. Contact your broker, IRA, for execution margin and other capital requirements. Everyone watching this presentation adheres to all disclaimers on TradeTheFifth.com and TradeIdeas.com. And all of that, you big boys, you make your own decisions, okay? All people like me do is try and give you a little help along the way. So what is a trend? A trend is simply herd mentality. So remember, I will be talking about the herd in context of the daily time frame with stocks and ETFs. So no stress during the trading session, as we need the close of each day to start to recognize the trend. So it's not as fast and as furious as this herd of buffalo, if you like. But the herd mentality over those days does start to take effect, and you see more volume, more price action coming in. So, it describes a behavior in which people act the same way or adopt similar behaviors, as people around them. So often you ignore your own feelings when other people are doing the same thing. You just seem to follow on. And that goes for traders as well. So another analogy, you've probably had a parent or a teacher ask you, if your friends jumped off a cliff, would you do it too? Of course not. You're insane. You're not insane. You're a strong, independent, free thinker. Why would you jump off a cliff? Well, in fact, sometimes people do. But what if your friends weren't jumping off a cliff? Instead, they were all buying shares in the latest tech stock. You know, every day you see the price going up a little, your friends are talking about it, how great the tech stock is. After a while, it's not so much as a question of, you know, when you're going to buy the shares. You know, it's why, when, you know, you'd want to get in, and that's where you want to understand that trend behavior. So how does that help with trading strategy, you may ask? So the reality is that our friends buying stocks isn't really going to move the price. However, the same herd mentality holds true for institutional traders, as they are human beings after all, okay? Even the algos are programmed by human beings. So what, you may ask? Trend behavior. So for the bulls, let's go through some basic scenarios and talk through what happens for the bulls. So when an institutional trader sees value in a stock and buys a sizable amount of shares in that stock, okay, other traders start to take note. And after similar analysis, and a lot of these institutional traders will use similar sort of software, support resistance levels, they'll look at similar fundamental analysis, you know, they will start to buy, and it makes the price start to move up further. It's simple. So as momentum grows and more traders don't want to be left out, the price starts to trend up higher. So that doesn't last forever, as those human institutional traders who got in early want to start taking profit at some stage. It's nature. You know, they are husbands, wives, they've got mortgages, they've got bonuses to think about, they've got holidays, you know, they are human. That although we'd like to think that we are totally emotionless when we are trading, those institutional traders and those desks will make decisions on their profit and loss, and in the back of their mind somewhere will be the nag that they've got to pay for this upcoming holiday or something like that. So those that got in earlier will want to start taking profit at some stage. So, and again, they've got their bonuses to think about after all. So for the bears then, so when we get to that point, so when some of those early buyers start to take some of their positions off, to take profit, if you like, so do some other institutional traders to cover any major sell-offs and to bank some profit. So they may not get rid of all their position, they may take half a position off, they may take 20% off, but they start to sell off a little bit of their position as well, because they've seen the start of it. At a certain point, a certain price point, those traders that got in the herd move later on actually find themselves at a price lower than their original entry. So, you know, this really is a critical time in trend behavior. You will find not everybody buys at the lows. You know, not a lot of people now catch those falling knives. Not a lot of people, you know, some people like me buying the pullbacks. But some people will buy higher up on that move for different reasons. But this point now is the critical point. So those traders have got in the herd move later on. Their position price, their buy price is higher than than the actual price it is now. So that original entry price is making a little loss. So the pullback, this is the important part here. So if those traders in a slight loss-making position still see strong growth potential and value in the stock, they'll buy more shares at a lower price, thus lowering their average holding price. So my personal positions that I hold in Netflix, I've got some really low positions as well. And when I get pullbacks, I will buy a position, I'll work out my average holding price. And most brokers will do that for you, and they'll show you your profit and loss and your average holding price. But to buy more shares at a lower price, you lower their average holding price. That gets you lower to break even if you get a blip, but also when it starts to move again, you're going to be in more profit. So other traders see this bullish volume and see this pullback as an opportunity to get in the bull herd again. And that's what we're looking for. However, trend failure. So if those traders in a slight loss-making position start to panic when selling volume increases, so this is on the other hand, so and it's all about that mentality, if you like. If they saw value in a specific stock, so recently Apple's pulled back, some people have seen value in there, but it's gone range bound for quite a long time. Even with the news that big executive reshuffle yesterday, I think it was, there was a little blip, but it didn't really go for it. So again, that's a critical phase. There's low volume coming in. Like usually I see 500,000 plus shares being traded pre-market in Apple. I was in my pre-market prep show today, and there was 40,000 shares being traded. So the volume isn't there up or down at the moment. But if traders start to panic, if selling volume starts to increase, we could get a trend failure. So, they sell their positions to reduce the risk and the loss, okay? So they'll dump, and that dumping effect really does make the trend fail. So some of those early entry traders see this high bearish volume continue and decide to close the rest of their positions and take remaining profit. So then that volume starts to increase, and that herd mentality to the downside really, really does start. So, lots more traders then sell and join the bear herd, and it's where you go, and then you get all those options played, you get lots of puts coming in, and people start to feel really negative about a specific stock. So that's when you get the failure, just like this, okay? You get the failure. Okay, next slide. So let's have a look at a trend on a chart. Okay, so we've just talked a little bit about that herd mentality. How does it look? What does it look like on a chart? So you'll look at most charts and you'll see a range-bound period. Not only range-bound period, but you'll see low average volume as well. Okay, so this is not a trend. But when we start to break out of that trend, that's when we can start to see some movement. Okay. So not only can you see that movement, you'll see the gap there as well. That was on earnings as well. You'll see the increase in volume as you're going up on that impulse leg. Okay, potentially start of a trend. Then we get a pullback against that trend. Look closely at the rejection candle there. We call it a hammerhead, okay, or whatever you want to call it. But look at the volume as well. That is a rejection on high volume. That is a really good sign that that pullback is ending, because we've got that increase in volume, but nobody wants to take it low. It's rejected those lows on high volume. Then we get another impulse leg. Again, look at that volume start to pick up as well. It's important to look at the price action and the volume. These are daily candles, okay? We get another pullback. Volume decreases slightly towards the end of that pullback. Now look, we get some big volume on a bullish engulfing at the bottom of that pullback. A good sign that pullback's over. It's all about trying to recognize what's happening on these pullbacks. And again, it's a daily time frame. So you see the little red doji there had high volume, but there was total indecision in the market on that day. The next day, the price gapped down. Institutional traders saw value in that and bought on high volume to end up with that bullish engulfing. And then we got the confirmation the next day with that gap up, the higher high, higher low, and we continued to go higher. Again, we got another impulse leg higher on this trend, and you'll see the volume really go and peak right near the high. The main thing here is you'll see a slightly higher high than this pivot here. It starts to run out of juice at that point. So what if we could measure this behavior in a consistent way, okay, with a certain set of rules, okay? So don't be afraid, I'm going to mention something really technical now. No, honestly not. I'm going to use basic Elliott wave rules and observations to measure and track trend progress, okay? And we're only going to talk about the basic stuff. None of this convoluted technical nonsense that a lot of traders like to talk about. By keeping it simple, we can measure the trend on a daily time frame consistently using the same method over and over again with the same results. We don't need to make it complicated. Just like a 100-meter sprinter, for example, will repeat the same training over and over and over again. Some training is just that start. He will spend every day just practicing that start. He will do the same thing, will do the same walk up. Everything's the same. And this is what we got to do when we are looking to give those rules and observations to measure and track that trend progress. So we've got to keep it simple. We're going to talk about 3 basic Elliott wave rules, 3 basic observations of behavior for measuring a trend with Elliott waves, and then we're going to put it all together to form a simple, repeatable strategy to trade the 5th and final wave of a trend. Why the 5th wave? Because all the other rules and observations have been met during the trend, and this is the highest probability move. Really difficult to trade a 3rd wave or a 2nd wave pullback or a 4th wave pullback because you've not progressed enough and met these rules and observations. If all of them have been met, you've got a really high probability 5th wave move, hence tradethefifth.com. Okay, so first of all, trend rules cannot be broken, okay? These are hard and fast rules. So the first rule is, we're looking at a trend here. The wave 2 must not retrace further than the origin of wave 1. So we'll see the initial start of this trend here. We've got the 1 pivot, the 2 pivot. It's a higher support level, okay? It's the same on a bearish trend as well, just the other way around. This is rule 2. The wave 3 cannot be the shortest of the 3 impulse waves, okay? 1, 3, and 5, okay? So the impulse waves are the direction of the trend, yeah? Wave 3 cannot be the shortest. Usually the first wave is the shortest. The wave 3 is the biggest impulse move, unless we get a really big move on the 5th wave. That gets longer than wave 3, and all of a sudden we are going to the moon, and that does happen. But at this stage, we want to trade the 5th wave. We've got to stick to these rules. So when we get this move up from the wave 2, we get a nice move. It's longer than wave 1. We're looking pretty good. This is critical as well. The wave 4 must not pull back beyond the extreme of wave 1. So the wave 1 pivot here is critical. If the wave 4 pulls back beyond this wave 1 pivot, that trend has failed. Now, there are things that I teach to trade that trend failure, but at this moment in time, we're just talking about these 3 rules, and we're about trading that 5th wave. So the wave 4 must not pull back beyond the wave 1 extreme. I keep repeating it because if we've got a set of simple rules, and then we'll go through these observations, you just keep repeating it all the time, you will only find high probability trades. Okay, the observations next. So these are a little bit more fluid, so they're not set in stone. So we've got zones here. So the first observation, so when we're swing trading, the wave 4 pullback has 3 zones that give probabilities of a new wave 5 high being formed. Okay, these are fib levels, if you like. So the first fib level, and I've rounded that 0.25 up, the 2389, whatever it is. We just need to get it to 25. We just need that little bit moved down. But we call it the green zone. Okay, that's an 85% probability. So on a long trade, if you find support in there and starts to move away from there, 85% probability is going to go on and make that new wave 5 high. Between the 382 and the 50, we call the amber zone. It's an 80% probability. And then between the 0.5 and 0.618, we are at 75% probability. Now, depending on how the market's behaving, you'll see a lot of stocks at some stages pull back quite deep to that 75%. You've still got a good probability trade there, because markets might have deep corrections, and so some stocks will correct along with the markets quite deeply. But as long as it doesn't go through 75%, it's still a good probability trade. If it goes below 75%, you're really rolling the dice, because it could just tip that wave one pivot that we talked about, and you will get that trend failure. So these are our zones. Obviously, the perfect scenario is getting the green zone, find support, start to move away, and then it goes for it. We'll talk about that, David, in a little while, because I'm going to do some examples. Okay. Everybody can hear me okay? Yeah. Yeah, okay, cool. Somebody said they couldn't hear me. Right, let's move on. Observation 2. So when swing trading the wave 4, this is all about the wave 4 behavior, basically, these observations. We've got a 535 oscillator, and that pulls back between 90 and 140% on the highest point of wave 3. Okay, now I'm going to go through some examples using our software on this. But basically, you can see here on the oscillator, this is the highest point on the wave 3. The wave 4 pulls back, and it crowns and moves back up again between 90 and 140%. That is the sweet spot. You put that together with your rules, with your, pulls back into the green zone, you've got a really good looking trade starting to come along there. Observation 3. So when swing trading the wave 4 pullbacks in the oversold or overbought zone against the main trend and crosses to return the main trend. So stochastic, okay? We suggest not 85 and 25, we do 80 and 20, because we want to make sure we've got some really high probability trades. So you'll see here we've got overbought at 80, oversold at 20%. You'll see this is a main bullish trend here. You'll see all green here. This is our stochastic. We've got what we call a false breakout stochastic. So that denotes a really strong bullish trend. Then when we pull back on the wave 4, it pulls back against that strong bullish trend and crosses over in the oversold zone whilst remaining between 90 and 140%, hopefully in that green, amber or red zone. All those things starting to really start to tie together with all the rules as well, starting to give you a high probability trade. So putting it all together, so we've got a checklist to follow now when we're setting up those fifth wave moves, long or short, and all must be ticked to give the green light for an entry strategy. If you've got one thing that's not ticked, you just throw it away and you move on to the next one. 90% of trades that you look at as a trader, you throw away because they're not good enough. Thank you, Patricia. I've spent a lot of years doing this, and I've got an inner circle that's been with me for years now as well. And one of the things I always talk about is my job is to turn down trades for those people or my memberships or whatever it is. It's my job to say no. If I can't find a reason, i.e., all of my ticks are, everything's ticked, everything's green light. If I can't find a reason, it's a good looking trade. So let's go through it again. Checklist. Wave 2 must not retrace further than the origin of wave 1. That was our list. Okay. Wave 3 cannot be the shortest. Wave 4 must not pull back beyond the wave 1 extreme. There's our three rules. Okay. Then we've got our observations. Wave 4 pull back into either of the three probability zones. 535 oscillator pulling back between 90 and 140. Stochastic pulling back against the main trend and crossing in the overbought zone for shorts and oversold zone for longs. So for me, when I first started doing this, I had pre-printed sheets that I designed and printed out at work when I was in the army, and I had a checklist. And as I was doing my analysis, I would check them off, and if they were all good, we go to the next step. So what next? So you can't just press go yet. We have a really good start and identified, how the trend is behaving and how the wave 4 has behaved in particular. So now we need an entry strategy. You can't just press go on every single one that you find. You need an entry strategy. So this is the important part. We need a simple and repeatable entry strategy with a minimum risk to reward. Okay, so this phrase simple and repeatable keeps coming up because that's how your trading should be. It should not be high stress. It should be simple and repeatable. So let's have a look at these, both long and short entries here. So I've gone here, we've got a 6 moving average of the highs and a 6 moving average of the lows. Then it's shifted forward 4 days collectively. So this green moving average for this long trade here, for example, we've had the wave 4 pullback, and this is my 6-4 moving average high for long entries. So that takes the average of the last 6 days highs, and then as you see, it's advanced, it's moved to the right. Okay, so a 6-4 moving average high. So when we've had the wave 4, it's found support. It's found support just in our amber zone there. Starts to come back up again. Our entry strategy, we've got to think it's got to be outside of the 6-4 moving average high for the next day's bar position. Remember, this is that bar, that candle has closed at the high that day. It's closed just below. So the next day, we've got to be sensible. We've got to go for that type of entry. For shorts, it's just the opposite way round. 6-4 moving average low for short entries. Now, this 6-4 moving average low here, this is a good case in point here, is actually above this pivot point here. But also, we've got to be quite sensible. We've got to be traders have got to be a bit savvy here. You've got to look at this previous support level on these days. This is strong support. So this is a starting point here, okay? But then we've got to look left and look at recent support levels, and our entry's got to be below there, okay? It's sensible stuff. So, final ingredients. Stop loss slightly beyond the wave 4 pivot. Target zone between 120% and 140%. Fib extension of wave 3 pivot to wave 4 pivot. Don't worry, I'll show you that. Minimum risk reward of 1 to 1.6. This is me. This is my experience over the last 15 years. If I haven't got a minimum risk to reward on a swing trade to that 5th wave target zone of 1 to 1.6, I do not get in. Because even if you've got a 50% win rate, and my win rate's higher, even if you've got a 50% win rate and your average win size is 1.6% of your trading account balance, and you're only losing 1% every time, you're always going to be in profit. Okay, so you've got to have those minimum risk rewards. You've got to manage them sensibly, and you've got to be hitting those targets. And some of them are 2, 2.5. We've had 300% recently as well. So next, then, let's look at putting that together, all together now. Don't worry, I'm going to go through some examples on some charts soon. Okay, so first of all, let's look at this picture. We have, first of all, the wave 4 pulls back into the amber zone. Tick, yep. The stochastic pulls back against our false breakout stochastic and crosses over in the oversold zone. Tick. The 6-4 moving average, the 535 oscillator is between 90 and 140%. We're looking good here, okay? We've got the stop loss just below the wave 4. Now, I'm not talking about the rules at the moment because those rules have already been met, because I'm using a screenshot of our Ninja Trader version of our Elliott Wave Indicator Suite. I'll be using a Thinkorswim version soon and all that sort of stuff. But what I'm saying is those rules have already been met. Otherwise, our software wouldn't label the Elliott waves. Okay, so all we've got to do now is concentrate on those observations. Stochastics crossover, 535 is good, good support in this zone. Our entry strategy's got to be above the 6-4 moving average high. We've got an automated target zone. You don't need to do that anymore, you know. But basically what you would do is do a fib extension from 4 to 3, back to 4, 120, 140, that's your zone. We've put it in automatically, okay? Then our risk to reward is 1 to 2 into the bottom end of that target zone. So as you can see, I've started to build a picture. Rules have been met, observations all met, tick in the box. I've got a sensible entry strategy above that 6-4 moving average high, stop losses below that pivot wave 4, put the risk to reward on last thing, 1 to 2. It's a great risk to reward, great looking trade. So let's just zoom in just to confirm that. So entry above the 6-4 moving average high, stop loss below the wave 4 pivot. This red arrow here is your 1%, if you like, and the target zone's at the top. So this is our risk, 1% of the trading account balance, for example, and our reward is 200%. So 1 to 2, and that's it. Our minimum risk reward, 1 to 1.6 here, is below the target zone and near the previous wave 3 high. So even if we get to this previous wave 3 high here, and we start to see signs of exhaustion, we either start to be very aggressive with trading stops, and that's a whole new, you know, I cover that in my boot camps, but you know, that's the trade management strategy. But even if we were happy with that 1.6 and it was really looking weak at that point, and we didn't want to wait for the target zone, you know, I've got to be happy with that sort of profit. So short entry now, okay, we're going to do the same thing. Stochastic this time has pulled up into the overbought zone and crossed into the overbought zone against this strong bearish trend. Okay, the 535 is between 90 and 140%. The wave 4 has found resistance in the green zone. 85% probability it's going to come down here. Our entry, remember, we talked about this before, below the 6-4 moving average low, but we have to look left at this previous support level and make sure we're below there. Stop loss above the wave 4, and we've got our entry strategy. We just need to look at the risk reward. It's 1 to 1.6. Again, let's explode that view and have another look. Remember, entries below the support level at 511 is a very cheap stock. Stop losses up here. We've got a risk to reward of 1 to 1.6 into the lower end of our target level there. So everything looks good, and we've ticked all the boxes. We've gone that extra mile. We've put the entry strategy together, and we've got that decent risk to reward. So it's a high probability trade. So the strategy now is complete, and I know it seems quite quick, and we're going to go through some examples, but you know, it is that simple. And if you look at this video over and over again, and you know, I will give you a link later on, because I have a core trading strategy training course. This is the first lesson, and then we go into the wave 4 behavior a lot more. I'll go through that later. So you know, without a minimum risk to reward, the trade is no good. Okay, so without that minimum of 1 to 1.6, the trade is no good. The wave 2 must not retrace further than the origin of wave 1. I'm repeating it. Guess why? Because you have to keep repeating. I will do, yes, Raymond. That's an important part, and I will do that. Or our software does it a lot for us anyway, but I will go through that. So wave 2 must not retrace further than wave 1. Wave 3 cannot be the shortest. Wave 4 must not pull back beyond the wave 1 extreme. Wave 4 pullback into either the 3 probability zones, 535 oscillator between 90 and 140, stochastic pulling back. You know, I've repeated this so many times over the last 15 years. It becomes part of your day. risk to reward greater than 1 to 1.6. We've got now a simple core trading strategy with a simple and repeatable set of rules that we must have to get into a trade. And as long as we follow those simple things, we will look for good probability trades. So we're going to go on to some examples. Before I do that, two things. We have core trading strategy training course. So this was the first lesson. This was recorded live when I was actually with Scott in San Diego, okay? And we have lots of other things on there. So that first lesson, then we've got price action and volume at swing points. We talk about framing the trend with trend channels, linear support resistance levels, ABC corrections, and then putting the whole strategy together, real examples. I think there's about 8 hours there in that course. And then also we have our Elliott wave indicator suite for Think or Swim, Ninja Trader NT8, TradeStation and multi-charts. I'm going to give you those links later on. But the whole idea is that core trading strategy, I developed some software that helps you trade that core trading strategy, make it simple and repeatable. Okay, so remember, I did say it's not rocket science. A large number of traders fail because they don't keep strictly to a set of rules when identifying potential trades. Oh, this will do. That'll be all right. You know, you've got to be strict. You've got to keep to your rules. You've got the checklist there. If it doesn't meet your requirement, you throw it away. Okay. So I've used this core strategy nearly 15 years now, and I've had consistent profits because I don't try to stretch the rules. You know, they're simple and repeatable, and you just have to get all the ticks in the boxes, and then you're good to go. So I hope you found this first part of the webinar useful, and you know, I can assure you that it is a simple strategy, but the simplest of things are usually the most powerful. If you can repeat something, it is really, it's simple and repeatable. You can go a long, long way. Let me just go back on these questions. Okay. Okay, right. Right, so let's just get rid of this. I'll answer those questions now. Let me just go loose on here. Let me pull up my Think or Swim. Okay, I'm just going to bring that down now. Okay, now I've got a lot on these charts, but obviously I'm live. So I want to give you an example today of a trade that triggered. Okay, I'm going to go back. I'm going to zoom out. So this is our Think or Swim. This is a Think or Swim version of our Elliott wave indicator suite. Okay. Now, somebody asked me, how do I identify the start of the trend and that wave 1, wave 2? Now, our software takes that away from you. Okay. This is a daily 2-year chart, and basically it's put the trends in there for you. Okay. We've got that wave 5 high. It pulls back from the wave, and it does it in real time, labels the 1, the 2, we've got the 3, the wave 4's pulled back, and away we go. So it's met the rules, but in reality, what you're looking for as well, so, you know, if you haven't got an indicator suite like this, you've got to look at these recent highs here. Now, look at this high, 236.62. This, after this first impulse leg move down, and then the wave 2, remember that first rule, it must not go beyond the origin of wave 1. The origin of wave 1 is this high. So at this moment in time, that's a wave 2. And then when it starts to move away and through this wave 1 pivot, we've confirmed a 1-2. Okay? So hopefully that answers your question on how do we find that. Okay? So how do we determine that first wave? We've come off a range bound period. I mean, to be honest, this is sort of a trend, but really the big move up was earlier. Okay, this was the trend. Then we've become corrective and range bound. We've got a slightly new high. But then when we come across a stock like this, and again, we have a stock signals membership, which actually gives you potential fifth wave moves on the 60-minute, the daily, and the weekly time frame. We run the scans for you. You download the spreadsheets every day. So basically, we got the 1, the 2, the 3, the 4. So let's go back through those rules. Let's go big on here. Let's go big here. So let's talk about the rules first. It's pulled back against the main trend. It's found resistance and it's been very rangy for nearly 2 weeks there in the green zone. 85% probably it's going to go on and make a new low. Look what it did today. Shot down like a rocket. I put this order on back here and it's been range bound ever since. It made a slightly new wave 4 high today, but didn't take the stop loss out for my order, because when I'm looking at an expensive stock like this at $177, I make sure, even though my wave 4's down here, 176.40, I'm going to be above a whole dollar mark, if you like. Yeah, this is our Elliott wave indicator suite in Think or Swim, Eric. Okay, I'll give you the link to watch the video tour of the Elliott wave indicator suite. So I'm using the indicator suite that we provide for Think or Swim. Okay, so we've had this pullback. I've decided on my entry strategy 167.46. I just needed to get rid of some of this type of mess as well. So I'm way there, but look at my risk to reward, 1 to 2.5. Okay, even to this previous pivot here after earnings gap down. Okay, it's 1 to 1.7, something like that. So really good, strong looking trade. So let's look at another. Okay. So what am I in at the moment? That's probably the best way to do it. Oh, I know. Let's go to FTNT. We're going to go to the weekly time frame here. Okay. So this, whoops, bear with me. So this is a longer term, this is an investment really. What you get is, I mean, this is good for options as well, because when we've had a wave 4 and we've started to move away, we've come through that 6-4 moving average high, for example. On a weekly time frame, we look between 20 and 30 weeks for it to hit our fifth wave target. On a daily time frame, 20-30 days. On a 60-minute time frame, 20-30 candles of 60 minutes. Okay, it's a simple rule and it works very well. So you've got a target price, you've got a date range, you can look for decent options trading strategies within there. So what this does is gives you that, identifies a high probability move. So this is the weekly time frame. It works just as well. Okay, let's go through this again. Wave 4's pulled back this time into the amber zone and just tipped into the red zone, started to move away. The 535 oscillator has pulled back and crowned between 90 and 140. Look at this really strong bullish trend here. Let's zoom out and look at this. Okay, false breakout stochastic on there, really strong. The stochastic pulls back and crosses over in the oversold zone. So we've got all of our rules are met because our Elliott wave indicator suite have said they've been met. Okay, we've got a really strong impulse leg. We're really interested in that wave 4 behavior. Okay, it's behaved perfectly. We've got a sensible entry strategy. For me, I needed to be above these and these pivots. Okay, when I'm talking about a weekly time frame, I'm going to buy a stock. I'm going to buy an $80 stock. I'm going to hold it for 20-30 weeks. I've got to make sure it's on its way. I've got a bit of wiggle room with the risk to reward, so I can go very conservative on this after earnings, you see here. Okay, so I can go after earnings, I can get that higher entry strategy, and I've still got a risk to reward of 1 to 1.6 into the middle of that target zone. Okay, right, these moving averages are just for entry. So this is the 6-4 moving average high. Okay, so that's the average of the last 6 days highs, and then it's skewed over 4 days, so it's always in advance. So it's that conservative entry for long, and then the red is for shorts, or we use it for trade management. We include that in our boot camp. But basically, if you're going long, you can start to adjust your stop each week, if you like, below the 6-4 moving average low. Okay, once you start to get in a decent profit making position there. So just to answer your question, I don't use any other move. The only other moving average we use, and we are going to be including in I think in the next 6 months, is this EMA cloud. This is our W5T EMA cloud. We've been developing this for over a year. It's part of our black box breakout indicator, which is another indicator that we do. But what we've found over the last year is the coincidence of this linear pullback zones that we've got, those green, red, amber zones, and that wave 4 tipping there in that EMA cloud is freaky. Okay, and we've tested it for over a year, and it is really, really freaky. So let me just go to, I'm going to go to Box. We just have some really great trades on Box. Okay, so I'm going to go to the 60-minute time frame this time. So the stop, if you buy the Elliott Wave Indicator Suite tonight, I was going to come on to this later on. We are going to give you our Stock Signals membership for free for life. Okay, and the Stock Signals membership, let me just bring it over here on Trade the 5th. The Stock Signals here, okay, this has downloadable spreadsheets every day of potential fifth waves, long and short, okay? Thinkorswim does not have enough capacity to do the scans for this type of trade. We've tried, and we've tried for years, okay? So it's usually $47 a month. If you buy the Elliott Wave Indicator Suite, we will give you this membership free for life. And when I sign in, you'll see it's very, very simple. Basically, it's a calendar, so it's all, you can all look back as well, long and short. You go to long, you click on the date, you download the spreadsheet, and the spreadsheet looks like, so for longs, this was today's spreadsheet. These are potential longs, potential longs on the 60-minute, and then also obviously it's the same for the short. Sometimes these lists are a lot longer. We just run the scans every morning. So hopefully that answers your question about the scans. Okay, so this is the 60-minute on Box. Now this was a big trade. Okay, this is a really big trade. I just wanted to show you here how this wave 4 hits our green zone and finds support in the EMA cloud here. Now this is happening 80 to 85% of the time right now. We've been adjusting it, but even on a 60-minute time frame or that weekly time frame, we've now got a non-linear support level and a linear support level converging, which is really, really powerful. And this is part of our Elliott Wave indicators, part of our black box breakout indicator, but we are going to release it as part of the Elliott Wave Indicator Suite. And when you buy it, you get a lifetime license anyway. So as you can see here, wave 4 pullback into the green zone, EMA cloud. We got the entry here. I actually did this live on Twitter. I called it live on Twitter, and it just went and hit the target zone there. You see how it really holds into that. I mean, these are fib levels as well. Those target zones are really strong. Did push up a little bit across there. Okay, right. It's very difficult to see the questions here because they don't. I can't move the screen down. So I've got to scroll through. Okay, so history. You want to see history? You go on to tradethefifth.com and you go, let me log out. The guy should have put this up. I've been doing these swing trading videos for 3 years, every day, okay? The track record here obviously only goes up to October 2018 because some of it's still current, but it goes back, and every single day you can look at the video of me setting up the trades. You can download the spreadsheet for that day, and you can look at every single day. So if you go back to, I don't know, wherever we started this, I've got more data than that. They haven't put it on yet. So start 2018. We go to the 2nd of May. I've got my video. You download the spreadsheet. You can track those trades every single day from the video and the spreadsheet. Okay, so that's the history of this swing trading strategy. I've basically done these videos for nearly 3 years. The guys are still loading all the data up, and because this was part of what was called MTB Pro, My Trading Buddy Pro, but we've grown since then. We've got a new website. We've got TradeTheFifth.com. So yeah, it's all in there in that swing trading there. So very, very lots and lots of history there. You know, a great deal anyway. And go back. It does work for day trading, actually. We use our black box breakout indicator more, but it does work for day trading. So if I bring over a 5-minute chart TOS, for example, okay. So let's go big on the 5. Let's tell you what. Do you trade off the 3 or 5 minute when you're day trading? Nick, if you're still there. 5. Okay, so let's go to the 5. Okay, I haven't got my Elliott wave indicator suite on this 5 minutes because this is our breakout strategy. So what I'm going to do, I'm just going to put the Elliott wave indicator suite on. See, this is our black box breakout day trading. Comes below the cloud. That's the entry. That is the winner all the time. There's another one there. There's the entry. Boom. So let's just put our Elliott wave indicator suite on there. Let's click apply. Okay, so today, for example, okay, we've had a wave for entry below the red there. We closed in profit. Okay. We also had our black box breakout indicator for a short as well. So, you know, we're all good always. So even on the 5 minute today, we've had the wave 3 pullback. We've had the wave 3. It's pulled back. Got the wave 4. Boom. Okay. What did I trade today that was good? PVH. I think that was a breakout though. Made a lot of money on PVH today. As you can see, it works exactly the same. The main thing is when you're day trading this, you've got to allow the trend to happen first, wait for the pullback. This was a prime example. You go on the red, okay, you go here. To be honest, our black box indicator was a bit more conservative with the signals there. It still made money. It was still, the arrow there was 1-to-1 towards the close. But the entry for this, for the fifth wave move would probably have been about a 1-to-1.6 just before the close there. So hopefully, Nick, that sort of shows you. Let's have a quick look at PVH, because I traded it off the black box today and I didn't have the wave count on it, so I don't know how that, no. So, and again with these, we can isolate the bottom. When you're day trading, you need to isolate, okay? Okay, let me just write that down. I'm going to give you the links anyway. So yeah, what the indicator suite, what it allows it to do when you're day trading or intraday, you can actually isolate the wave count. I'm not going to show you how to do that now because it's including the booth count, but I can pick a bar, I can isolate the wave count, it'll start the wave count from there, okay? It's very difficult for me to do it because I haven't got the whole indicator suite on this particular chart, because it's my day trading chart for the membership, and I use the black box on there. Maybe if I do it on here, I change the time frame to 5 minutes, okay? And I can just show you how to isolate, how it isolates. It's the same on NinjaTrader as well. So this is PVH. So I've got say the start of the day here. We have the big blip low. That was obviously the start of the trend today. That was bar number 781. So I can go in there. I can start the bar number here at 781. Click apply, and there's your Elliott wave count for today. Okay. Now with our black box breakout indicator, we traded this move here. We pulled back. We got the support at the level there, and then because at this stage this was a wave 4, and then we traded that move all the way up there, and then it pulled back again, found support here on a new wave 4. And then started to push up, but obviously towards the end of the session they didn't quite go. But yeah, very, very powerful stuff there. Any stocks you guys want me to look at as an example? I mean, I can't guarantee they're going to be on a wave 4 pullback right now. Twilio, that's on my hot watch list, I must admit. So we've had a 5th wave move and gone beyond on the daily. Very interesting. I teach a multiple time frame strategy. You see the pullback on the 4-hour, pretty good actually. We're beyond there. Crossed over just on the oversold zone. The 535 is good. We just into the green zone there. But again, this is a prime example. You've got a wave 4 pullback. 535 is good. I don't need to measure it. I know it's good, but I can just literally, I can go on there and I can go 0 to the highest point. Come on, think or swim. Highest point in wave 3. There we go. Good. Stochastic's good. Look at our multiple time frame dot cloud. Really good. But remember, one of our things was the risk to reward. But just below the wave 4, we've got to be outside the 6-4 moving average high. What's our risk to reward? 1 to 1.1 into the target zone there. It's not 1 to 1.6, guys. You don't do it, okay? Then you've got to think about, okay, multiple time frames. Let's have a look on the 6-minute time frame. What's it doing on the 6-minute time frame? Where's the wave count? What's it doing? Not so good here, okay? So yeah, Twilio, we're a bit late to the party. That was the move up there. Okay. Thank you, Nick. Yeah, the thing is, for my trading strategy, I have a 5-pronged approach. So, an example, okay, $1 million trading account balance, okay. 35%, 350,000 in a blend portfolio, okay? So a blend portfolio is physical holdings, and I've got 25 stocks and ETFs in that blend portfolio. I then have swing trades off the weekly and swing trades off the daily time frame. So that accounts for another, something like 50%, because those are the ones that I call my sausage machine strategy. They're all coming in at different times. Some of them are off the 60-minute time frame, and I'll swing them just for the week and I'll take the profit. Some of them I become very intimate with. For example, RTN, that's in my blends, defense stock. I'm in a swing trade at that at the moment that's nearly at 1.6% profit on the account balance. I'm already in it on an investment as well. When I take that profit from that trade, I use that profit to add to my position in my blend portfolio. And then the rest of that percentage is for my day trading stocks or futures, okay? So it's about trying to balance that overall, and again, it's all about margin, what margin you've got available, what capital you've got available, and how you put those strategies together. Yeah, it works on ES as well. Let me bring my futures chart over. So what I do on ES for day trading, I've got an Elliott wave count on my 5 minutes, but on my 2 minute and on my 3 minute, I just do the black box breakout indicator. But if I go to my charts here, you'll see YM and ES here on the 5 minute. Oh, there we go, on the wave counts. Today's not a good day. It's not been trending, and we've had the Fed speaker when you get those big things. To be honest, I do not trade futures when we've got Fed speaking or big announcements. I stay away, okay? I really just stay away. But it works for futures just as well. As you can see here, I mean, we're trying multiple time frame stochastics for futures as well. So, you know, we're always trying to develop those strategies, but it works just as well for there. Right, let's go to stock CRMD. What time we got here? Because it's nearly midnight my time. It is midnight my time, okay? So we're going to finish up with CRMD, and then I'm just going to give you the links. CRMD. Let's have a look at it on the daily first. Ooh, that's not a trend. That's a range. We've had a trend, but then we've had some big spikes here. This was news driven as well. There was, you know, earnings has been pretty poor on this one. These moves have been very spiky. It's very news driven, this stock. Not really a great trend to trade. We've had these highs. I wouldn't trade that off the daily. I'd look for 60 minute, and I'd be looking to isolate wave counts and see where this is a very deep pullback right now. I'd be isolating right here on the wave count at 183. Let me just isolate that for a minute for you. 183. Okay, so this is where we are right now intraday. Okay, we've just had a fourth wave pullback. Oh, this is very nice. Good spot, Jonathan. I'm going to be using this in my trade room tomorrow. It's a very cheap stock though. I'm not a fan of cheap stocks, but when they go hell for leather. So here we've got to do a quick management. Okay, stochastic's good. Okay, the only thing that concerns me is we've gone false breakout on the top, false breakout on the bottom, and then we've crossed over against that. So it is a weak trade, and this is purely because it's cheap. Okay, so let's just measure the 535. That's not good enough for me. Okay, it's not met our rules. Okay, so all of a sudden you get a bit excited. One of your checklists has failed. You don't get in the trade. Okay, does that make sense, Jonathan? Yeah, it looks good to begin with, but we've had the gap down here. We've had the pullback against there. We've got great resistance here in the green zone and the EMA cloud. Fantastic. But I think it's got a little bit more room left to pull back between 90 and 140. So it could be testing this level again. So you've got to be wary about this. This is why you've got to have those conservative entries. And you've got to get everything checked in the box, okay? That's our next development, David, AI. We're looking at that. I do have trading on the black box. The black box breakout indicator and the Elliott wave indicator suite both come with training boot camps. Okay, that were recorded live, people asking questions and everything like that. ATRs used on the black box, and again, we teach people how to use that when we do it. Okay, so I've just got to bring it. I do a couple. I want to put some links in there. Do I put them in the chat, Scott? Okay, so let's see if that works. Okay, this is the link to, hopefully you can see it. You can see the link to the store. So that's the Elliott Wave Indicator Suite. Now, if you're interested in the core trading strategy course, which this was just part of, that course is there as well. And black box breakout indicator, bear with me a minute. I've got to sign in to do that one. Again, if you buy that Elliott Wave Indicator Suite, I will give you lifetime membership of that stock signals, because I do believe that you need help finding those stocks. Now, you know, this is raw data, okay? It's raw data. So we give you a few, there's a few filters on there, but basically long, short, 60-minute, daily and weekly timeframes. So let me just get you that black box storefront. Can you just let me know, can you see those links? It works on Forex, Mike. Yeah, just as well. Okay, thanks, Nick. Thank you, Sarita. It works on Forex futures. The black box doesn't work on Forex because you need volume and price action. But Elliott Wave Indicator Suite works on Forex fantastically, okay? Really, really good. I did a recent TV show in London, and we did Forex, and we did Elliott Wave on Forex all that time. So it's pretty good. So I've just got one more link to put in for the black box. Just let me find it. BBBO. So there you go. So there's the 3 links. Okay. Got any questions? I'll put it in my chat. Paul at tradethefifth.com. Now it is midnight. I am up again at 5:45 a.m. because my team are on the West Coast and it'll be 9 p.m. for them. So bear with me, but I will get back to you within 24 hours if you've got any questions. But we've got a lot of support. We do free monthly webinars to support the Elliott Wave Indicator Suite and the Black Box Breakout Indicator, so you're not left alone, because I want to make it work for everybody. I spent a lot of years trading this strategy and a lot of grief and stress getting it onto Thinkorswim, NinjaTrader, TradeStation. So, you know, I want it to work for people. Okay, Scott. So for me, that's it, I think.
All right, that sounds great. We'll have the recording up later on tonight or tomorrow and send everyone a link to the playlist. Yeah, it's all good.
Thank you very much, Scott, and thank you for turning up, guys. I'm going to go to bed now. I've got to get up in 5 hours or so.
Yeah, time zones are a pain, huh? All right.
Oh, absolutely.
Yeah. Thank you, Paul, and thank you, everyone, for attending. And like I said, we'll have the recording up soon. And Paul, I'll shoot you an email to follow up.
Yeah.
Talk soon.
Great stuff. Thank you, Scott. Thank you, everybody.
All right. Thanks, all. Bye-bye.
Cheers.